Hello friends, we'll be discussing an illustration which will be related to the balance sheet problem. This will be a small problem for your reference. So let's start with it. Now, when we are talking about the balance sheet problem, we understand that we have to prepare three things: trading, profit and loss account, and balance sheet. So without wasting your time, let us just hop onto the questions directly and then we shall figure out how to go ahead, or rather how to go about this problem. Let's start with the small problem that we have right now for your reference. So we have the problem for our reference. This refers to Messrs. or rather Mr. Mohan was given the trial balance for the year 31st March 2017. He has given certain details to us. Let's reiterate them for you. Capital balance has been given as 6,50,000. Sales has been given as 9,70,000. Purchase balance has been given as 4,30,000. Opening stock has been mentioned as 1,10,000. Freight inward has been mentioned as 40,000 in total. Salaries has been mentioned as 2,10,000. It's an expense. Other administrative expense has been mentioned as 1,50,000. Furniture has been mentioned in the total here as 3,50,000. Trade receivables and payables are 2,10,000 and 1,90,000. Bad debt comes to 5,000. Investment in government securities comes to around 1 lakh. Cash in hand and cash at bank has been given here, which is 1,87,000. And there's one thing that we have missed out in this specific thing, which refers to the discount allowed or the returns here. So discount allowed is 19,000, discount received is 9,000. And returns here have been mentioned as 20,000 and 12,000 in total. So total of all these comes around to a trial balance total here, which is 18,31,000. Now, with all these details, they've given certain adjustment details as well. Let's read them out. Closing stock has been valued at 1,80,000. We have to depreciate furniture by 10%. Now, when all these details have been given, the first step that we'll be doing is preparation of trading account. So let's start with that. So while we are preparing this trading account, we'll first prepare the whole thing and then we'll go on with the explanation. So let's start with that thing. Now, the following trading account has been prepared. We haven't totaled it so that we can explain the whole thing first to you. The thing that we have taken into consideration is the opening stock first of all, which is 1,10,000. Post that, we have taken purchases. The net purchase amount has to be taken. Hence, the returns has to be subtracted first. So, gross purchase is 4,30,000, out of which the returns have been subtracted, which is 12,000. That means the total amount after subtracting this 12,000 will be moved out, which is 4,18,000. After this comes the next part of the debit expenses. Freight inward has been taken into consideration, which is 40,000 rupees. With this, we have completed the debit side of the trading account and the expenses of it. Now, we'll move on to the next part, that is the credit side of the trading account, where we'll first take into consideration the gross sales. It has been mentioned as 9,70,000 and the returns here, or rather sales return, amounts to 20,000. So the total amount that will be taken outside is 9,50,000. After which the closing stock has been taken into consideration, which is 1,87,000 again. So after taking all these things into consideration, let's figure out the tally of the debit side and the credit side, and let's then figure out if we have net profit or net loss in this scenario. So as you can see, the interim tally shows that the credit side is more as compared to the debit side. That means we have a gross profit situation. Now we'll figure out how much is the gross profit. And for your record, the tally will be 11,30,000 here. So gross profit has been taken into consideration as 5,62,000. Now this will be moved to the preparation of profit and loss account, whereby it will be moved on the credit side of that account. Now let's start with the preparation of profit and loss account first. So we've prepared the profit and loss account also for Mr. Mohan. Now, this is as per 31st of March 2017. The first thing that we have taken into consideration is the gross profit, which is 5,62,000. Now, after this, we'll move on to the expense side first. The first thing that we have taken is depreciation. Furniture, or rather, we have to provide depreciation on furniture at the rate of 10%. 3,50,000 is the original cost of it. 10% of that will be 35,000. Hence, depreciation here is 35,000. Next is salaries, which is already mentioned in the trial balance, 2,10,000. Administrative expense, 1,50,000 has been taken. Discount allowed is 19,000. It's an expense for us. Similarly, discount received is 9,000, which has been mentioned on the credit side. Bad debts amounted to 5,000, which has been taken into consideration. And with this, the profit and loss account has been prepared. We need to figure out whether we have net profit here or net loss. So for that, we'll prepare an interim tally. So as you can see, 5,71,000 is the credit side balance, whereas on the debit side, it is less than 5,71,000. 4,19,000 to be precise. That means we have a net profit situation. So let's calculate how much is the net profit. So 1,52,000 is the net profit that we have figured out. Now this will be moved to the balance sheet preparation, which will be the last part of it. Right now we'll tally, or rather we'll mention the final tally of this profit and loss account, which is 5,71,000. Now the next step will be preparation of balance sheet. So let's move to that. Now, while we are preparing the balance sheet, we understand that we have to take into consideration the adjustment as well, which is the closing stock as well as the depreciation. So, whatever final amount you mentioned for furniture will be the net amount after subtracting the depreciation, and capital balance will have addition to the net profit. So, we'll first prepare the balance sheet, and after that, we'll go ahead and explain you the whole balance sheet in detail. Let's start with the preparation of balance sheet then. Now we've prepared the balance sheet for Mr. Mohan as well. We have mentioned the liability side, we have mentioned the asset side. We'll complete the liability side first with the explanation part. The first thing that we've taken into consideration is the 6,50,000 capital amount, in which we have added the net profit, which is 1,52,000. The total comes to 8,02,000 here. Now after that, on the liability side, we just have one item, which is trade payables, 1,90,000 being the amount. Hence, with this, we complete the liability part. There is more to go on the asset side. First being the furniture, for which you have to take the net amount outside, for which you have to subtract the depreciation here. So 3,50,000 is the cost of the asset, out of which 35,000 is the depreciation that you will subtract. So the balance that you will have is 3,15,000 outside. Closing stock has been already pre-valued at 1,80,000, so that has been mentioned accordingly. Trade receivables were given as 2,10,000, which has been mentioned there. Investment in government securities were around 10 lakhs, or rather, investment in government securities were around 1 lakh, so which has been mentioned there. Cash in hand and cash at bank, which is the last part, has been mentioned as 1,87,000. Now, with this, we have completed posting all the entries in the balance sheet. It's time for us to figure out whether the liabilities total is equal to the asset side total or not. Let's figure that out, or rather, let's check it out. So the balance on the liability side is 9,92,000. For us to tally this illustration, or rather to tally this balance sheet, we should have the similar balance on the asset side. Let's see whether we have the same balance or not. So it comes as the same balance, which is 9,92,000. That means balance sheet has tallied, and this marks the closure of this small illustration that we had to discuss with you. Although this had, or rather this has, certain very less illustrations, or rather very less adjustments that you can compare with as compared to the previous sum, but all these small steps are necessary for you to understand which item has to be considered first, where it has to be posted, what are the effects of such items, and how adjustment entries are supposed to be carried out. So I hope this illustration has given you a lot more clarity on that. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.